Last time I showed you 5 tools that traders use, and the most common question was simple. Okay, but what does an actual trade look like? So today, that is all we are doing. We follow one trade from start to finish. How you spot it, how you get in, where you get out if you're wrong, how much to buy, what to do while you wait, and when to take your money. No confusing theory. Just one trade, step by step. Let us go. 2 quick things before we start. First, this is a made-up example just for learning. It is not me telling you to buy anything. The lesson is how to think, because that is what you can actually use on your own trades. Second, I will talk you through like it is happening live, without knowing how it ends, the way real trading actually feels. Because the real skill is not being right every time. It is having a plan for when you are wrong. So let us meet the trade. Here is what I am looking at. First, the big picture. This stock has been steadily going up. The price is riding above its 2 trend lines, and that tells me the trend is healthy. So I am only looking to buy, never to bet against it. Next, the pullback. For about 6 days, the price dipped, but it stopped right at the slower trend line and bounced. It did not crash through it. That is important. A dip that holds is a chance. Chasing a stock that already ran is not. Then I check momentum, which is just how much energy the move has. On the dip, the energy cooled off, but it never went cold. In an uptrend, a healthy stock takes a breather and then keeps going. And there were no warning signs at the recent high. So just from the picture, this is already looking like a real opportunity. But a good-looking chart is not a reason to buy yet. Beginners jump in the second a stock touches a line and then watch it keep falling. The touch is just an invitation. I want proof that buyers are actually showing up. So I wait for 3 green lights on the same day. 1. The price bounces and closes back up near the top. Buyers took control. 2. A lot of people are trading it. Big volume. That tells me the move is real, not a fluke. No volume, no trade ever. 3. My momentum tool flips from falling to rising. My slowest signal agrees. When everything lines up like that, the agreement is the edge. Now I will buy. To keep the numbers simple, let us say I buy at a price of 100. Before I think about making any money, I decide where I am wrong. This is the step beginners skip and the pros never do. I look at how much this stock normally moves in a day. That is a tool called a TR, the average true range. Here it is about $2.50 a day. I set my exit a little below the price, far enough that the normal wiggles will not kick me out, but close enough to protect me. That puts my stop at about 95, just under the bounce and the trend. If the price drops and closes below that, the trade is broken and I am out. No excuses, no one more day. That means I am risking $5 per share. Remember that number because it decides everything next. This next step is boring, and it is the most important thing in the entire video. How much you buy is what keeps you in the game for years. The rule is simple. Only risk a tiny slice of your account on any one trade. I use 1%. Say your account is $50,000. 1% is $500. That is the most I am okay losing if this goes wrong. Now the easy math. Take what you can lose, 500, and divide it by your risk per share, $5. That gives you 100 shares. So I buy 100 shares at 100. Notice the size came from the risk, not from how much I could afford. If my exit were closer, I would buy more. Farther, fewer. Either way, the same $500 on the line. That sameness is the whole secret. Okay, I am in. Now the part nobody talks about, the waiting. This is where emotions take over, and where a plan beats willpower every time. My plan has 3 simple parts. First, pick a target. I am risking $5, so I want to make at least double that. My target is around 110 to 115. I look for where the stock got stuck before. Second, move my exit up, but slowly. As the price climbs, I do not tighten it every day, because that just shakes me out of a good run. I only raise it after the stock makes a clear new high. Now my profit is protected, but the trade still has room to breathe. Third, taking some money off early is optional. Some people sell a little and let the rest ride. There is no perfect answer, just decide before your emotions do. Once I am in, my real job is to do nothing until the price tells me to act. Every trade ends one of two ways, and I have an answer for both before I even start. The win. The price climbs into my target zone, around 110 to 112. As it gets there, the energy starts to fade. The stock makes a new high, but with less power behind it. That is my signal. The move is getting tired. So I sell into the strength and take my profit. That is about $10 a share on 100 shares, around $1,000. A 2-to-1 win. I never try to nail the exact top because nobody can. The loss, in the other version, the bounce fails. A couple of days later, the price closes below the trend line and through my exit at 95. I am out, down $500, exactly what I planned for. No adding more, no hoping it comes back. This is the part nobody posts online, and it is the part that makes the whole thing work because the loss was small and decided in advance. When your wins are double your losses, you can be right less than half the time and still come out ahead. So that is one full trade, start to finish. Spot it, get in, set your exit, size it, manage it, and take your money. 6 steps in the same order every time. The last video gave you the tools. This one showed you how to use them together. If this helped, this is video 2 in the series. Next time, I will show you how I find these setups in the first place, my simple weekend routine. Subscribe so you do not miss it, and tell me in the comments, would you have taken this trade or skipped it? Remember, this is just an example for learning, not financial advice. See you next time.